If you're interested in trading with BetAngel, then visit our website where you can download a free trial of BetAngel Professional and BetAngel Trader. If you want to learn how to use them, then visit the Academy where we give you a detailed, structured walkthrough of each product. And if you're an existing user, then head on over to the forum where we have a load of files for you to download to customize and use within BetAngel. So if you're interested in how I trade racing, the process is relatively simple. I profile a race, I look at the way I think the race will trade, how much volume it's going to do, when that volume is going to arrive, and then I have to make a decision about what's happening on each individual runner. So there is a process that takes place before I turn up at a race, but I'm also participating in the race at a particular moment. So I'm looking for a situation where the volume has built to a certain level where I feel comfortable getting in and out of the market. But then I begin to draw my attention and focus on to one particular runner. And what I'm trying to do is to understand what the market thinks of this particular prospect. I'm thinking about what other people are thinking about, effectively. That's the way that I trade. And, I could use other metrics as well. And some people use form or whatever. But basically, all of their decision-making and processes boil down to actually placing a bet or opening a trade. And when you're trading the way I tend to trade pre-off horse racing, excluding exceptionals and special situations, I'm looking at what those people are doing. So if somebody decides that they like something, they're going to back it, and I'm interpreting that information. I'm trying to work out how far that has gone and how far it will go and when it will stop moving in one direction. And I'm looking to take advantage of all of that activity in the market. So I'm almost trading based upon everybody's research and information, apart from I'm doing it by looking at exactly what they're doing within the market. And that is a process that you would typically coin as order flow. Now, before I used the term order flow, nobody had ever really particularly used that, but it's something that I myself actually took from financial markets where trading order flow was a thing. Although, because a lot of the order books are hidden on financial markets, I think that it's much harder on financial markets than it is in betting markets. And to an extent, people may be iceberging orders in or doing clever things, but fundamentally speaking, all of the activity has to be reflected in the market. And especially with pre-off horse racing, all of that has to come into the market just before the start. So there's that lovely period between sort of 0 and 10 minutes, sometimes slightly longer, sometimes slightly shorter, where all of that money comes in and determines where the price should be. And we're looking at the order book, we're looking at the information that's available to us and making a decision based upon what we think people are attempting to do. Now, ever since I used the term order flow, I've noticed that other people use it, but sometimes totally incorrectly, because there are two things that I'm primarily looking at. I'm looking at price action and order flow, but necessarily it's order flow that leads to price action. But very often you see people discussing things like the charts on Betfair and describing that as order flow, but they are two very distinct things. So I've done this video to basically explain those two distinct things, but also talk you through a trade so you can understand specifically what decisions I'm making and when, and why I'm making those decisions. So let's have a look at a trade in this market. So upon arrival within the market, I immediately look at a few things. I'm looking at how much money is going through. That's a given. I won't participate until the volume is appropriate. But then I will look at each of the individual runners, and we can see in this particular example that we have 4 runners on the screen, and we can see that 2 of them are at the bottom end of their current traded range, 2 of them are at the top. And if you look at the way that the market behaves, then you can tell that there's a correlation there. You can tell that because 2 have been backed in, 2 have gone out, and that has to happen within the market. The market has to balance at 100% of book value. And as a consequence, if something comes in, something has to go out somewhere else. And because the correlation is strong in this particular market, and we can see that they're at the extremities of their current trading range, that looks like an interesting market to me, because you'll get one of 2 things happen. It will break through a range that it's currently traded in and accelerate a little bit further, or it will just bounce off of that particular support. But the important fact here is you've actually got several choices here as to which runners you could actively trade. So you're typically looking for a runner to trade. You're looking to either go with the flow when it breaks through a particular point within the market, or perhaps to oppose it on the basis that it's gone far enough already and will head back in the other direction. So the first level of assessment you do is having a look at the general state of the market, where the runners have traded, and that sort of activity. And you can see, based upon the volume percentage that we have on each of the ladders here, that there's quite a lot of volume accumulating at key points within this particular market. So yeah, we're making a general judgment here on what's gone on within the market and where those key points are. Now, what I've just discussed there is not actually order flow itself. This is basically an analysis of what's going on within the market and how the market is structured, and the exact state of the market. This is an area where you can look at the market and you will begin to see repeating patterns, because you will look at the setup and you'll sort of say, recognize this before, seen it before, where you go from there. I do make it look easy, but that's simply because I've traded hundreds of thousands of markets. So I've seen these patterns repeat endlessly. So that initial stage is basically just making a quick assessment of what we can see in the market, and that's giving us the opportunity to create a trade setup. From that particular point, what I do is have a look at the charts. And this is what I mean by trading price action. What you're doing is you're looking at the chart, you're seeing where the charts have gone, and you're seeing if that lends support to what you can see within the general setup. You're basically seeing where all of the price activity has been before, and whether that's giving you a clue as to what could potentially happen from this point onwards from here. So price action is sort of a part of the key of the setup, really. It's giving you a clue as to what people have done so far and whether they were willing to sort of push it to a certain level. You're looking for support and resistance, or potential support and resistance points on the charts that give you some indication as to whether people were willing to go to certain levels within the market, whether they're willing to back to a certain area or lay to a certain area. You're generally trying to get a feel for if it's completely one direction, or whether there's a massive amount of activity in the market one way or another, or whether it's sort of you're looking for all of those key elements within the charts. You're just trying to make a general assessment as to where the market has been. It doesn't tell you where it's going to go, because for that we need to actually look to order flow, because order flow will confirm or deny whether we were right on these general assumptions. So when you're setting up the initial trades to the market, you're making some broad-based general assumptions, and these tend to lead to repeating patterns, but not always. Before you actually go in and actively trade, you need to sort of turn to order flow in order to sort of get confirmation as to whether all of those assumptions that you've made are actually true or not. So there's a distinct line between the setup, between price action, and between trading order flow. But when you're active and you open your trade, you're looking to order flow to confirm all of those assumptions that you've just made in the opening part of the trade. So now that I've talked through all of the key components that set up a trade for me, let's actually go in and have a look at a particular trade and the sort of things that I'm looking at, and more particularly how order flow influences the outcome of this particular trade.
So on arrival in this market, the interesting thing is that we have two of the top four that are at the top of their current traded range, and two at the bottom of their current traded range. So we're looking really for evidence about what's going to happen to this particular point from here on in, whether people are going to continue to back or lay, and how that influences price. We are also looking at the amount of money that's available in and around the current prices, because on the second favourite you can see there's money spread on both sides. So if one of these gets taken, that's going to be interesting to us, and that may develop a trend for us. But also on the favourite you can see here most of the volume's been traded at or around the current price, and there's a fair bit of money below it. So if we look at the charts, you can see on Dubai Fountain that there was, from the opening price, there was a fair amount of backing, and the backing has sort of continued inwards but stopped at about 2.5. So that's the interesting point for us. Is it going to break that? Little drift on the second favourite, slight drift on the third, and on the fourth you can see that the price has continued to come in. So that looks like fairly sustained sort of support for that particular runner. So the scenario that we have here is the favourite's been backed in but appears to have stalled at the current price, and there's money below it which seems to be able to at least temporarily stop it from going that much lower. So I'm looking to basically lay the favourite here, and for that to mature to a profitable trade I need to see some evidence of support for some of these other runners. By that I mean they're going to get backed. People are going to start backing them, the price is going to come in, and that pressure on these other three runners, or at least two of them, is going to help us achieve a trade on the favourite. We don't know how far this trade will go. Some of that will be dependent upon how much support some of these other runners get, but as long as they do get some level of support, that should help push the price of the favourite out. So I put my opening trade at 254, and you'll notice that I took the money out at 254. And the reason for doing that is I would have had to sit behind a big queue at 252, and I wasn't prepared to do that. So I'm reasonably confident that that's not a terrible decision, and you can see more money's come in behind me at 254. Now always what I will do is put a number of trades above the current price, and if you note where the top trade is in here at 276, this is basically saying that's where I think the price is likely to go. That's where I expect to get matched within this market. And putting trades in on the exit side below that is basically just giving you a bit of an insurance policy. You can see I'm swapping the ladders over here as well because I'm interested in seeing if the second ladder here continues to get backing support. So I want that right in my line of focus. And you can see as the trade starts to move up, I begin to move into a small profit. Now we really need to see a little bit of support from some of these runners. So hopefully the second and third ladder are going to start to come in, but we can see that the fourth ladder is continuing its gentle drift. So it's just a question of sitting here and waiting, and if it goes below these prices down here, then I would consider exiting at this particular point. But other than that, I'm just going to sit here and let the market work its magic, basically. So I'm just realigning the ladder to make it clearer for me and seeing where the money is within the market above and below the current price. That's what I'm looking at as I'm moving the ladder. And you'll see that as we get filled, the chance of me making a potential loss here is diminishing. So I'm looking also at the second ladder here and some of the others, and just keeping an eye on the general activity within the market to see if there's anything interesting that's unfolding. But at the moment the trade is gently going in. Now did you see at 264 a big chunk of money arrived, and that's basically going to slow down or maybe even halt the move, and you can see that's been moved to 262, and then some money's come back in behind at 264 and it's gone again. So one of the advantages of spreading your closing trades out is, can you see there, I was able to sit and observe that price activity, that order flow that was going through the market, without having to panic or exit my trade. And that is because I've got these trades stacked up. Now, can you see above here, a big order came in at 274. So my guess about where the extent of the move would go was probably about right, because it's unlikely that I'll get matched at 276. Simply because there's a large amount of money in front of it. But can you see what I'm trying to do here is I'm trying to get a roughly good entry position and a roughly good exit position, and I'm sort of straddling that range within the market and then looking for supporting evidence. As the market moves in my favour and fills some of those orders, it's reducing by default my chance for a loss. I have left some money here at 254 because now did you see that? 264, another large order came back in and it's gone again. So you can see somebody's putting some money in and out of the market. Some of it's getting filled, and that's sort of making the market just sort of wobble around a little bit from here. But we're pretty safe at the moment. I don't think the order's going to get matched at 276 unless we get and there you go. You can see a big chunk of money's gone, and we have actually been matched. But also take a look quickly at the second. I'm just placing my final exit trade in at the top here. But have a look at the second and third ladder. You can see that the price has come in on those. Those two ladders represent about a third of the market. The favourite that we're trading also represents about a third of the market. There's that order again coming in at 272. The pressure that you're seeing on the ladder 2 and 3 is pushing down, and that's pushing the price on ladder 1, which is also a third of the market, out, and that is what is completing our trade. By getting a decent entry position into the market and then spreading our exit, we're able to ride out any of this interim volatility. But it's important to note that when you actually get towards the business end of the market, as we're getting closer and closer to the off and the horses are low, and big order went through at 274, the market will get a little bit more volatile, and this is because people are closing positions, getting on last minute bets and so on. So always make sure you define a frame of reference that where you're actively going to trade the market, in terms of I'm going to get in around this criteria and I'm going to be out by this particular moment in time. because that will help you trade more effectively as well. But anyhow, I've narrated this in quite a bit of depth to give you a good idea of exactly what I'm looking for, and I hope that this gives you a better indication as to the sort of stuff that you need to look for if you want to trade profitably on pre-off horse racing.